Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for Wednesday, October 6, 2021. Before I get too far, for those of you that attended the live webinar, it was a lot of fun, timely, fast, a lot of questions, got everything done that we wanted to. If you like these videos, because they're free, do me a favor. If you like them, thumbs up. Helps me get more people looking, and then more subscribers. If I didn't have paid subscribers, I wouldn't be doing this. I hope you understand that. While I do this free, and I do 3 of these a day that you see every day of the week, Monday through Friday, and 1 for the weekend, I would not be doing them if I didn't get the paid subscribers. That's what pays the bills. How do you think I pay for the studio and my staff? So let's talk about the event of the afternoon. Mitch McConnell, with the approval of the Republican senators, sent a note to Chuck Schumacher, and what did he say? Okay, here's your deal. Gee, I wish I could call the market as easy as this was to call. They're going to kick the can down the road into December. There has to be an agreed-to debt ceiling increase. It's not going to be open-ended. If the Democrats don't want it, it's on you. They have turned the table beautifully on the Democrats. The Democrats just walked into all this with their infighting. They're not agreeing to anything. A crazy bill of $3.5 trillion that was never going to get passed. Crazy tax increases that I still don't think are going to get passed. Okay. At the end of the day, they've now got to go back to the table. So why wouldn't they take this? There's no reason. They get time. They get to regroup, figure out what they can get is a bill that might pass muster and how to get through in the Senate, the senators that are going to be solidly against it. I would imagine, not even knowing what they're going to come up with, they'll get no Republican votes. But they might get back the 2 Democratic senators that are holding this up, West Virginia and Arizona. Why not? That's the game plan, okay? Is the market going crazy on the news? No. It's good news. It takes the bearishness out of a lot of the markets, but it's not something you want to run with because you haven't solved anything. And you can't see my leg. I'm kicking here. I don't want to fall as I'm doing it, but I'm kicking the can down the road. Does that make sense? I hope you think it does. So when we come to the S&P, you're still underneath the 18-week average. The bias is down, and with all this crazy, and they have been crazy swings, we're basically up a 0.5 percentage point for the week going into Thursday. When you take a look at the chart action, it has been difficult. This has been extreme swings, back and forth, day in and day out. Look at the range. I'll take you to today. The range today from high to low was 80 points. That's not a little bitty range. It's not like they were back here. I want you to go to the day before just to give you an example. This is almost 100 points, okay? This is almost, that is 105 points. So my point is, it's been exceptionally volatile. What did I walk you into and define the month of October as? A volatility month. September in stock indices is normally, I cannot tell you it's all the time, but it's got a history of being a down month for the stock market. That I can prove. This month starts off with volatility, and you never know quite where it's going to end. I don't think it's going to end without the volatility. Why? Because we're kicking the can down the road. We haven't resolved anything between Democrats, Republicans, and we don't know what kind of bill we may or may not get. But here's what I know. We are not going through that debt ceiling. If tomorrow you wake up and the Democrats didn't take this deal, it's political suicide. They not only get cornered into a terrible situation of shutting the government down, they don't have an opportunity to fix their other bills, and the discord will be crazy. So expect that they're going to do that. Logic works, and what always happens at the end, politicians wait. Now, one other call I want to make now, and let's see how accurate I am. If, let's assume they agree on a December 15th date. I don't know what the date will be in December they agree to before this temporary extension runs out on the debt ceiling. They'll probably wait until December 5th. They never do anything to give you enough time. It's always at the last minute in a crisis. That is unfortunately the nature of these political beasts. We have to deal with them because we elect them. But at the end of the day, that's how it works. Okay, what about moving averages here? you're caught. You're caught at the 100-day average and the 18. This is what you're narrowed into. As I keep going with it, also, the Bollinger Band did its job completely as it should. If you haven't taken that Bollinger Band course, do so that we have. It did its job. And the people that didn't come out in these first tests, boy, are they sorry because the market's moved on them. Do we have an uptrend at work? No, we have the swing line up, but the bias is down since you're still under the 18-day average of closes in red. We've got the market defined as to what it's doing, and when you look at momentum, it's turned up. Now, should you get over 43.81 in a fraction, well, then on a close especially, traders will say it's bullish. I have a problem with it, and I'm not saying it's not bullish. In a classroom, it is. But if you bought there, do you really want to have a stop under the most recent low? And I wouldn't know where else to put it. Not the prettiest of charts. In the NASDAQ, you got up just high enough tonight where you're knocking on the door of 48.35. Take that out and you break the pattern of bearishness. Now, this market has been running the lower Bollinger Band. That's the Gorilla Glue trade that you hear me talk about. I call it Gorilla Glue because that's the strongest glue you and I can typically buy for our house. There's certainly industrial glues that blow that away, but they probably make those too. But as you look at this, today or tonight's the first time you're breaking away from that. What about the pattern? You never did embed. You just got oversold. Interesting. That's all I can say. The Dow's different. The Dow got up tonight to 34,416, taking this out. It got bullish. Yeah, that's the dirty word. It got bullish. Higher lows, higher highs. Now, the resistance is the 100-day average right above it. Remember, when a market rallied up here, that was the resistance. We fell back. I would assume that's still in a resistance play. Should you get a piece of news that's really good and it come alive, well, then the upper Bollinger Band's a target. This ended the bear cycle that we had. I'm no longer in that cycle. I'm in the bull cycle. I don't like the size of the risk. All the way back to the lows of today, that's the minimum you got to use, is 33,718, and here you are buying the market potentially 500 points higher. I don't know that I like that so much. In the Russell, we've been talking. Look at all these moving averages. It's so difficult to get through that. And that's what the market's fighting right now. The trend is down. The bias is down. And momentum is down. It's still very much in the bear play, but this makes it so hard to trade. It's not even flipping a coin. I wouldn't know what to do with it. In the VIX, okay, this market came back down yesterday. I would be surprised if you don't get right through when you're open again, 1962, and start walking into these moving averages. Folks, you've just taken out the fear. We have a debt ceiling that we have 60 days to work on. That, to me, takes away the fear in that market because they were getting Jimmy Dimon and all these bankers worried about how they're going to handle the debt ceiling. Janet Yellen scaring the world. I watched the president today threatening people. That's how I viewed it. You're not getting your Social Security check. You're not going to be able to live. How many times do you hear that? To the average guy on the street, that's terrible to hear. It's a news clip because they are blaming the Republicans. The table turned in one very neat little play on them, and now they have to take what they have. We'll visit all this again with these same words in December. I have no doubt that nothing will get done until we get to the next step. How often do they take us to the precipice? They make us think the world's ending. You know, when I was a younger broker, I'd fall into those traps. Don't. All right. So in the bonds, this is still very bearish. You know, is the market embedding? So let's look. You can't count tonight because we don't know where Thursday is going to finish. Both numbers are under 20. Both are under 20 on Tuesday. Both were not under 20 on Monday. You have a 21 reading. So tomorrow's very important in this market. Is it going to be able to embed or not? What's the trend? Well, it's curly down, but if it can't embed, the way you correct that is you get a correction. In other words, the market often gets a bounce. That can lead the market into these areas. So a bit dangerous there right now. The 10-year note's just oversold in a big downtrend, and you had a bearish crossover back over here. See the 18-day average get under the 100? I don't see that being broken easily. I am looking that, yeah, get a rally in the market so that traders can get short. That's my thinking on it. Could I be wrong? I'm wrong a lot, so who the heck knows? In the D's dollar index, I am still looking for price and the 18-day average to come back to each other. I'm wrong if you take out the high right here. Otherwise, that's what I think is going to happen. But I have not lost my overall bullishness. The market is ahead of itself. That's all that I see. If it's ahead of itself, then I question what the euro is. The euro got down to the Bollinger Band today. If it gets down to it after a rally, and I'll show you. For any of you that have taken my course, you know that the market ended up being a sale right here on the enhanced Bollinger Band course. What's the cover number? It's there. You don't need me. Take the course. The course teaches you that play. You don't need me to come out and say, do this, do that. You will know how to do it. 8 videos, each a couple of minutes long, 7 to 10 minutes, you'll get the idea. As long as that stays in play, I say that the pros are still selling this rally in the market. In the British pound, trend is still down. Market's sort of stalling. It's come up a little bit. It's no longer oversold. So until this all changes, I contend to think that the pros are still looking at this market. I think they're looking at the 136.46 level. And as long as you don't get over 136.48, I think they're looking for a short sale. That's what I think. Doesn't mean I'm right. In Bitcoin, yay, yay, yay. New highs on the whole move. I'm a fan here. Why? Because the chart does a lot of cool things. It gets up to the Bollinger Bands, falls back. It gives you sideways action. This has turned into a neat charting vehicle. What I don't like is on the full-size contract, the risk. But they give you the option to trade these micro mini contracts that I love. So I think that's been smart. I think Ether's going to get one very shortly, and that'll become one of my other favorites in here. And you're over the upper Bollinger Band. Would I ever tell you to buy it up there? Absolutely not. You know better than that. Now look at the differential between Brent and WTI crude. You're at a new high for this move. Now, on the energies, you're backing off a little. If you lose the embedded reading tomorrow by this closing under 80, actually under 79, then I think you have to be out of the longs temporarily. What do I think right here? I think the pros are buying right here, right now, looking at that number for tomorrow. In WTI crude, I don't think they're buying this one. Why? You're already flirting with the 79 number, so I think they'll back away. I think they're looking hard at buying heating oil on this pullback here, still looking for the higher number. Again, get under that 79 on a close, and I think they'll back out of the market. And you're still working off an overbought condition. But boy, this market has been fun to call because each time it's going to that Bollinger Band, it gives you the opportunity back down. I was watching this market today and going, are these people crazy buying over that at new highs? And I had some clients, people do, I'll either talk or they write or they'll put out a memo that they want me to address in some manner. I said, not the place to be. And I like that. But very much the place to be on breaks in the market until you take out this last break low. So I'm still very much in the camp there. So as I said, the one thing I want to be is your guy. I want you in the morning, the first thing after you wake up and you had your coffee or breakfast to say, charts. I want to see what Ira's putting out. These free ones, come on, they're meant to be just what they are. They're free without the meat. The meat's in the morning subscriber videos for both ETFs and the futures markets. They'll start off each weekday, shorter term. In other words, every morning at 5:30, 5:40, I start recording. I'll give you swing trades. A swing trade can last days. Remember, you're dealing in futures with 90% leverage. Longer term positions I also do, and I love the weekly charts for those. So on Saturdays, what I'll do is each Saturday I'll give you those because they only change Friday to Friday. You can have all kinds of moves, but you're counting on those settlements. You can view the charts on phones, you can view them on pads, and of course our website. Each video, I start you off with news. What went on in Asia? Europe, what's going on. I'm going to cover 40 charts, and on the bottom of the page on our website, when you look at it, there's a scroll bar here. As you pull it, let's assume you wanted to go right into the soft markets. Pull it, soft, so light up big words. Remember, I'm older. I want to be able to read it. And I think it's important because I don't know the vehicle you're watching it on. How's that for the word? But I cover over 40 charts at a time. Now, I do something else that a lot of people don't do. If you're a subscriber and you have a chart you want me to give you special analysis on, I do it for free. You write me at my email address. As long as you're a paid subscriber, I'll get the chart back to you with what I think on it, and you take it from there. You decide what you want to do with it. Try doing that with other market analysts. They're not going to do it. Can I handle a huge amount in a day? I cannot, and I'm not going to. But I don't get a huge amount. People are very good about it, and I love doing it when they write me about it. But I'm not going to do it for the person that's not a subscriber of mine. Clear enough on it? So how do you do this? You're going to blow $7.95. It's not even a tick in most markets. You're going to look to see, does this make sense to you? You do it on the website. You go to our website under the word research. It's all explained. You sign up there and you can quit like that. Most people end up converting that. If they want longer ones, we offer a 1-year subscription that you can't cash in. Once you buy it, but we give a good discount instead of the $15 every 30 days after the lead-in price. So a lot of people will do that. Your call. Go to the website, give it a try. I'm Ira Epstein.